Jessee Realty Group Studios. I'm Rob Jessee, and this is Coffee with Rob. I'm here with Ernie Chandler from OVM Financial, one of our preferred lenders. And today we're going over the 7 myths of purchasing a home, which I think is very needed. So Ernie, tell us a little bit about OVM, and then we'll go through the myths.
Well, OVM Financial used to be at one time, it was called Old Virginia Mortgage, and of course we had some folks come along that decided to make something bigger out of the company, so they came along and invested, and now we're one of Inc. 5000's fastest growing companies in the nation, so we're very proud of that, and we're looking forward to helping Roanoke teams and other realtors in the area do great business.
And so OVM's been in Roanoke for quite a while. It's just now starting to get some steam, and because of the programs you offer, correct?
Right. Our company is doing great in Virginia. In Chesapeake, we've been voted several times as RVAR's top mortgage company in the area. So we're hoping to bring that great service, that great quality to this area as well.
Awesome, awesome. So let's go ahead and just kick off right into the myths.
Okay.
Myth number 1, and I see this a lot with not that there's anything wrong with it, but I see this a lot with internet pre-qualifications. Everybody thinks that if they pre-qualify for a mortgage, that they automatically get the loan. Is this true?
Well, in a lot of cases, it can happen, but it doesn't necessarily mean that you're 100% going to get the loan. If your credit is stellar and you've done it before and you know the process, the pre-qualification is pretty solid in most cases. We deal with a lot of first-time home buyers, and a lot of those folks aren't educated. They don't know everything they need. And that's one thing that we do specialize in. We work very well with folks to help them get that first home. I could give you a pre-qual today, and 6 months later, your whole situation could change.
Right.
So that's really what we want people to understand, and we try to give them information on, the things that they shouldn't do during the process. And also, there are many cases which our company does well at as well. We're able to, if there's one little situation that's a little sticky, we can get them in front of an underwriter up front to kind of help the process and help the realtor feel more confident, as well as showing them houses and help them find that house that they're best suited for.
And I think sometimes, and I see it because I started in the mortgage industry, is that a lot of times buyers don't know what they really make and things like that. And I think that could probably change the pre-qualification too.
It really could. We always ask for W-2s and pay stubs up front, and in a lot of cases tax returns as well, because there's all types of deductions and things that people take, whether depending on the type of job that they have. Truck driving is a great example.
Absolutely.
So we do everything we can to try to get their income down to the penny or as close as we can, and get you a fairly solid pre-qual that you feel comfortable helping them find a home. So.
Awesome. So let's kick off into myth number 2,
Okay.
and this is a whole lot, but that you have to have perfect credit to get a house?
No, you don't, and that kind of goes into what I was just talking about. Like I said, different. Everyone has a life; they live, and everybody, one day you wake up, you're renting. The next day you decide, hey, I want to buy a house. And you see a great deal on one. A lot of times that's how it gets started. But a lot of times you haven't planned for this, especially if you're a first-time home buyer. There could be something on your credit that wasn't actually, thought about, or something that you haven't saved the money in the exact place, or different things. So there's a lot of things that we can help address and help get them ready to buy, even if they're not quite ready yet.
Mm-hmm. And a lot of times I think some people have little medical collections and things. How does that affect?
If it's not too many, sometimes they can be overlooked. But, if there's a long list of them, then we need to sit down and talk about them. So a lot of it just depends on the situation, and, once we sit down and start looking at their credit, we, get with them and help them figure that out.
what is the lowest that, and I know that circumstances are per case, but what is the lowest that typically you could go? 580 is.
Yeah, 580 we found, in certain cases you can go that low, but we found that a lot of times there's something really pulling the score down to get it down that low. So we have what's called a credit analyzer, and so if we see a few things on the credit report that are actually causing an issue, we'll sit down with the client and see how we can resolve that. And if we can't, we go into the system and we'll say if they pay this, this, and that, then we can get your score to here. So that really works well for a lot of our clients, and within a month or two, sometimes they're ready to buy.
Awesome, that's great. That's great. The next myth has to do with your income. A lot of people think that their income should be 28%, or their house payment should be 28% of what their income is. Mm-hmm. Is that true?
Well, that's kind of the standard, or what everybody looks at. But that's not always the case. We have an automated underwriting system that we use at OVM. So we have all these programs, and a lot of people tell me, well, I went to the bank and I saw this program, or I went here and somebody told me this program. Well, there's tons of mortgage programs, but what we really like to do is look at your exact situation, see how much money you have, what you're paying on. If I can get it to go through at a 32% debt ratio, I will, as long as the system will allow me to. So,
and that client's comfortable with that payment.
Yeah, and that's really the big thing too, Ron, because and a lot of times I don't tell a customer, I say, well, hey, this is what you qualify for. I say, tell me the payment you're going to feel comfortable paying when you move into that.
And you start from there. That's a great way to do it.
Yeah,
that sets people up for success instead of failure.
Right, exactly.
That's great. I think the next thing in number 4, and I sold 2 houses over the last month or so because of this. People believe that they have to have 20% to put down. Wow, is that true? Not many people have 20% to put down.
I was going to say, we don't see many of them. We do get them occasionally. But yeah, that is, I did have somebody tell me that the other day. They had been saving and saving and saving, and they'd gotten up to maybe $10,000. They were looking at a $150,000 house, which, they didn't even close to that. And I said, well, you know what? You have $10,000, that's great. We have programs we can work with you on that. And that $10,000 will go right into that home. It'll go into your equity, so you're not losing the money.
Right.
And so it works out great. But, once we sit down with clients, we can figure out whether they qualify for some of our lower down payment programs or even our no down payment programs.
There's some government programs out there like that.
Yeah, exactly. So there's lots of opportunity for buyers nowadays.
Good. That's awesome. Now, I think when I was in mortgages, it was the same. Everybody thought that they had to get a 30-year mortgage. Right. That's the best program out there by far. You had to get a 30-year mortgage. Because I didn't think because their moms did, their dads did, their grandpas did.
Yeah.
Is that true?
Well, believe it or not, most people that get a mortgage get a 30-year mortgage. A lot of that has to do with, getting a payment that they can afford.
Right.
You're going to get the best payment on a 30-year mortgage. Now, if you're someone who, makes really, really good money, and you have almost like an unlimited budget as far as your monthly payment, and you just want to buy that house and get it paid off quick, we have loans we can do as 15, 10, 5, 20, whatever. So we can do other terms, but it does seem like most of the time the customers are most comfortable with a payment in a 30-year mortgage.
Okay. Now, for a person, because Roanoke has begun to be kind of the medical part of Virginia, with Virginia Tech, and you have Carillion. So somebody that knows that they're only going to be here for 2 years and then move, would you recommend a different type of loan to them maybe?
I personally would not, only because you can't predict the future. So, someone thinks they might only be here 2 years. I was born and raised in Roanoke and haven't left. So the bottom line is, it's good to go into a mortgage safely. Use your extra money to pay off other bills that you may have. If you buy a car, try to pay it off sooner, because in the long run, $200 or $300 here and there extra on your mortgage over a 2-year span is not going to matter much. But, you know, if you do find that you're staying in the home, there's other ways to pay your mortgage down. You can pay extra towards the principal each month and not even have to refinance to do that.
Right.
So there's all types of options, and of course, you know, if someone is interested in shortening their term of their mortgage, we can always sit down with them as well and talk about refinancing at a shorter term.
Right. Okay.
So,
Myth number 6, and you see on TV with the different, and most of them are the internet-based type companies. You'll see them, 2.99% interest rate.
Mm-hmm.
Are they always what they're cracked up to be?
not really. You know, a lot of those are, there are different types of programs, you know, short amortization. I mean, basically, some of them will be like that rate for a short period of time, and then it goes up.
And the fine print's so small, you have to get like up on the TV,
Yeah.
and pause it with the DVR and all that to be able to read
Yeah, I
it.
mean, you know, the bottom line, and I know a lot of people, you know, they maybe want to try to get into a house and try to get as low of a payment as they can, but at the end of the day, you still have to qualify at what that 30-year payment would be. Years ago, you didn't have to. You could get what we call a 2-year arm, and, you know, we could get the payment down, and you could get in the house and qualify at that payment. But with the new laws and regulations that are in place now, you can't do that anymore. You actually have to qualify at the 30-year payment, even if your payment's less. So, you know, why put yourself in a risk of possibly having to refinance in 2 years at a fear of your payment going up, when you could just start out at a comfortable payment that you know you can pay, and you're going to have to qualify it anyway.
Right. And not saying that this is what they do, but when I was in the mortgage industry, a lot of times it was kind of a bait and switch. It's kind of like the car industry too, where 0% down. Well, you have to meet those qualifications at 8,000 credit score and whatever to be that. And a lot of times the clients would come to the table and the interest rate's way different than what they thought there was.
Well, and the thing is too, Rob, like a lot of the online mortgage companies, you know, they're selling, you know, like the easy process of applying online. And that's really the whole thing they're selling, if you watch the commercial. With us, we do have that as well. You can go to ErnieChandler.com and apply online.
Nice plug.
But as well, you can actually sit down with a local professional, myself and my team, and get more information, which is nice. And you can bring your information by. You can stop by and see us anytime. So we operate off referrals, and that's how we do business. And you don't get referrals if you're treating people bad. So.
Right. And I think for me, this being one of the biggest investments you'll make in your life,
right?
You really need to be personal with it.
Yeah.
You need to actually sit down and talk to a person and things like that instead of going through that online and all that. I think texting's good and stuff, but I think that initial process, you really need to sit down face to face.
Well, and it helps because you know who you're dealing with. It's like imagine if a computer had to show you a home. I mean, I've seen people search for homes on a computer, but at the end of the day, you need to get in that house and see it. So you have to deal with real people.
Because the pictures, they never look like the house does typically.
Oh yeah, exactly. So the hands-on experience, as devalued as it may seem, with advertisers on TV, it is a great experience, and I encourage people to give us a call.
Awesome. So myth number 7, and I see a lot of renters and things like that. Is it always better to own a home than to rent?
Not always. I've had people, it goes back to what I was telling you a minute ago, the payment they can comfortably afford.
Mm-hmm.
Well, if you're used to paying a $200 rent payment each month, and all of a sudden you're looking at a house that's $800, you're talking about a huge payment increase of $600. So did you plan for that? In some cases, people have, they've gotten a promotion at work or a better job, and they're able to, and they're looking at this as their next step. They're getting ready to have kids, and they want to have that home.
Right.
So a lot of it really depends on, their situation and what, they're ready to do. I was talking to a couple yesterday. They were concerned about the payment or whatever, but they qualified for probably $200 more a month than what they were telling me.
Right.
But they were sensible enough to know that if they're going to buy a home, they also need to allow room for, like, if a gutter falls off the house.
Oh, yeah.
I think you had one the other day, the gutter has to be repaired before they can even buy the house.
Absolutely, the wind.
Yeah, so, you have to prepare for things like that. So, we try to educate our buyers on that as well, to where, when they're going to buy a home, that they're looking to buy in their price range and what they're going to feel comfortable paying.
And I think sometimes you have to look at age and ability too. It may be best to rent or best to buy, because right now, if you rent, your payments are going to be a lot higher than
That
if
is
you were
true
to
too.
buy.
This market right now, it's a great opportunity to buy, because right now, rents seem to be higher than buying, or what I could tell. If you want a nice place to
Right.
rent, buying is definitely a great opportunity right now.
It has the possibility to save a couple hundred, if not more, a month.
Yeah.
But I think on the backside of that, you have to know your budgeting and things like that, because if the gutter falls off, if the AC goes out, are you able to be that saver to save the money to fix it, and things like that. Me getting up in age, not really. But, I think down the road, mowing my grass and things like that, I probably need to, and we have a lot of the baby boomers and things like that are starting to move into those one-level houses with the homeowners association that takes care of the yard and takes care of a lot of the things, but they still have the benefits of owning their home.
Right.
And saving that money. But yeah, I understand.
Well, yeah, I see home ownership as a huge opportunity for someone to invest in their future. Okay, and when you're renting, you're not investing in anything.
Right.
You're just paying for a place to live.
You're paying that owner's mortgage.
Yeah, basically. Yeah. So I've had people, they've had a little situation with their credit, maybe the rate's a little bit higher than what their other friend got.
Mm-hmm.
But basically, they're worried about the rate. I said, well, right now you're paying 100% interest if you think about it, because
Right.
you're paying rent. So if their rate was 4.875, yours was 5%, you're still getting a great deal. Your payment's like $10, $15 difference. It's not huge, and you're investing in yourself as opposed to, like you said, the owners
Right. Right.
investing in him. So. Yeah, I think it's a great opportunity for folks that are at that maturity level and they're ready to move on to that next
And
step.
I think that comes with the conversation to your lender.
Yeah.
Sitting down and being honest.
Right.
And then also, I think it's my duty as a realtor to make sure that the people are comfortable, because I never ask for max pre-qualification. I do about the same that you do. What is your pay? What are you comfortable with in payments?
Right.
A lot of times people qualify for way more than what they're really kind of comfortable with. And I don't want to be that person 2 years from now that they call and say, hey, we can't afford this house. I need to sell it.
Well, one good thing about your team, I will say, is that, if you have someone that's looking for a home and their price range is, where they're comfortable, maybe is a little lower than some of the other homes that you have that are in certain areas or whatever, you guys work really hard to try to find them something in their price range. So
Absolutely.
I think you guys do a great job of that as well.
Well, thank you. Well, this has been Coffee with Rob. Ernie Chandler with OVM Mortgage, one of our OVM Financial, one of our preferred lenders, and they do an awesome job. For more information, or if you want to speak to Ernie, it's ErnieChandler.com, correct?
Yeah. Yep.
Reach out to him, and thank you.